Hi everyone. Once again, we had a very narrow trading range in the overall stock market today. The S&P 500 closed down 0.01% after being up 0.17% the session before. I just happened to read on Business Insider that these last 2 days were the two narrowest sessions for the S&P 500. I think it was at least in the last 10 years or whatever. I'm not sure exactly what it was, but last two sessions, the narrowest ranges outside of New Year's Eve, pre-New Year's Eve session. So the market is in a really tight trading range right now. And what I suggest to everybody is you should never short a dull market, even with us being extended here. You go for a parabolic run here, and you're going to really be upset that you short the market. But you see the NASDAQ up 0.01%, volume lower than the session before, and low overall. Russell 2000 pulled back 0.29%, still unable to get above that 1188, 1192 level that I am watching. Or 1189, excuse me, 1192 level that I am watching to remove another half of the remaining small hedge. Now, with all of today's positive narrow trading range, there was a lot of positive action out there. The one sector I saw perk up today was 3D printing stocks. DDD breaking a downtrend line. SSYS breaking a downtrend line. Also appears like it's rounding up. XONE coming off its 50-day moving average. VJet has put in some accumulation recently. And then there's also ONVO, but I'm not that interested in that one. But be watching these 3D printing stocks to see if they can't base out further. But it's good to see this leading sector move higher. Unfortunately, today something happened that I did not want to happen just yet. Tesla, either now it forms a real handle, or I'm going to miss out on this breakout because I just don't have enough cash. This is too short of a handle for me to buy, and it feels like it's just going up every day. It's still making just a right side of the base for now. It has not made a real official handle. This handle it made here is considered a low handle for me. It's not near the top of the range. It's more near the middle of the range, but still good. But it broke out today. We only handled for 1, 2, 3 sessions, and that's not long enough for me. So if Tesla doesn't handle here, damn it, I'm going to miss out on this one. And SCTY can't stop going up, though volume is trailing off each session. So that makes me think maybe it can pull back now. But once again, I need SCTY to stop trending higher and to handle here and then give me a pocket pivot point buy signal or break out of a handle. I would really like to see it do that because it has a very nice daily chart pattern. The signals I got tonight were very speculative. ALDR IPO gave me a signal, but you can see the 1883 close as well off the 1937 high. So it's not that strong. I would have liked to have seen it close stronger. 1895 was the previous intraday high 2 days ago. I would have liked to have seen it close above that to actually have made this a new long. CTRL, very speculative looking stock, but look at the BOP volume and price surge off the 50 and through the 200-day moving average here. It's a little early in its pattern without a long enough consolidation sideways. If this June to now consolidation was about a month longer, I would probably go long control. But keep an eye on this one to see if it moves. VMEM is a stock that I noticed had a volume, BOP, and price surge today. Keep an eye on that one. And then LIVE, if it would have closed stronger, even though closing at 459, puts it very close to the close over 463. It needed to close above 463 to trigger a new long position, especially with the weak close. It's definitely not a long, but I got live on watch. The two new longs I am taking are quite speculative, and before I get into those, I want to go over two sells. Maxwell, after all those damn early gains, is just basically eliminating them. This stock appeared that it did want to do well after starting off immediately with a 15% gain, but now following the 20-day moving average heavier volume sell-off, we have another heavier volume sell-off below average though, below the 50-day moving average, and with that the stock just looks like it's rolling over. We've lost all of our gains, so we're going to protect the remaining gains we have, selling another 50%, and we'll see if we can't bounce off the 50-day moving average here. Another close below this line, and I'll be totally done with Maxwell. And then DOC was a new long position on Friday. I warned everyone that it was a short base, made mention of that before, that the stock likes to break out and not work. with the short base. It seems speculative, but there were other REIT stocks that moved like HF. Guess I should have selected that one, huh? And that one put in a nice price move, but I figured it was up too much in one day for that one to be viable. So I went with DOC. DOC is reversing, closing below the open of the signal on Friday, even though it's not closing below the low a day of the signal date, which is where my first cut loss was, and then below 1401. The fact that it has immediately reversed the Friday move, which was an option expiration signal, and did it with the stock losing max green bop. I don't care if it was lower volume or not. It suggests to me that DOC is not ready to run, and even if it is, it shouldn't have lost max green bop. If it would have pulled back on lower volume and kept the max green bop, I would have held it. GIGA pulled back 6% today. It closed at 323 below the open of 325, but my first cut loss is 316. Why am I not selling any of that? Because it kept its max green bop. So the catalyst and the reason for me to put on this position, because it's under huge accumulation with a balance of power totally on the buy side, it's a hold. DOC indicates that the balance of power is no longer on the buy side, as it couldn't get bought at all as the bid dropped, so we are done with it. Now the new long positions, iCloud is going to be a 2% position. This is a higher quality stock, earnings per share and sales growth over 100%. Next year earnings estimates are over 100%. I want to get long it. However, this stock has bit me twice, so hopefully it's not a third time. So we'll see where it goes. I don't want to pay too much for it, so I'll probably cap a limit order to around 720. But hopefully I can get long iCloud and it doesn't fake me out this time. If it does, no big deal. It's only a 2% position. You can't make this a 5 or 10% position because it's not breaking out of a 1 month flat base pattern on huge volume. So that's why this one has to remain small. So if you think that a 2% position iCloud small, then you're going to love LIQD. LIQD, after finding the lows in May, has based out on very quiet volume, receiving some accumulation, very strong BOP showings. Now after surging to max green BOP on a volume surge yesterday off the price lows with it closing near the high of the day, it's following through with another strong session on even stronger volume, holding that max green BOP. So LIQD is going to be a new long signal for the speculative side, so I can get some beta here since I don't have really a lot of capital put into the top stocks, which aren't setting up correctly. But LIQD, because it's up 10% today, is only going to be a 1% position. Also because it's coming more off the lows than most longs I go long. Like iCloud, you can see has been trending higher. You can see a series of lower highs and lower lows consistently since May. LIQD, you can only see two. The May, June, and now late June move here. So actually two really. May to June, and it didn't put in a higher high or in early June. Just put in a higher low. So now we only have this going on. So LIQD is going to be a 1% position. If it fails, my first cut losses would close below 160. My final cut losses would close below 148. iCloud is going to be a 2% position. First cut loss is with the close below 677. Final cut loss is with the close below 642. All right, everyone. Have a great Tuesday.